One of my friends recently asked me to recommend a solid TradingView indicator specifically designed for scalping strategies. So in this video, I'm going to introduce a highly effective and versatile indicator for scalping, and it might just be the missing piece in your trading system. This isn't just any basic indicator. It's got all the tools you need to master pullbacks and ride profitable waves in the market. So make sure you watch this video until the end, because I'll also walk you through real chart examples of buy and sell trades that I took using this strategy, and the results are nothing short of amazing. To add this amazing indicator to our chart, click on Indicators and search for Scalping Pullback Tool. It's the one that's created by Just Uncle L. Once added, you'll see that it's overlaid directly on the price chart. Let's first break down what we're seeing. To better understand each of these lines, we'll open the indicator settings. First, we have the price action channel, shown with a red midline and two bands, upper and lower band. This channel is built based on an exponential moving average, EMA, with a length of 34, calculated based on close, high, and low. The red center line is the 34 EMA based on the closing price, the upper band is the 34 EMA of the high, and the lower band is the 34 EMA of the low. Then we have a green line, which is an EMA with a length of 89. This is our fast EMA. Next is the blue line, an EMA with a length of 200. This is our medium EMA. There's also an option to enable a slow EMA with a length of 600, but we won't need that for this strategy. Additionally, this indicator can show higher highs and lower lows, useful for identifying market structure. Fractals are enabled by default. These are shown using small triangles and help identify market turning points. You can enable ideal fractals to filter out noise and get more reliable signals. Lastly, you can remove candle coloring or background if it clutters your view. I personally like to keep the background clear for a better price action analysis. Now, let's get to how we can actually use this indicator for scalping.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
The first condition for a buy trade is that the price must be trading above the green 89 EMA, the blue 200 EMA, and the entire PAC. This shows us a strong bullish trend. For example, starting from this point, we can see that the price climbs above all three lines and sustains that position. This is our first clue. Next, we wait for a pullback to the PAC, which happens right here. Once the price touches or enters the channel, we mark the most recent resistance level from where the previous push began. Then we wait for a bullish breakout candle that closes above this resistance level. Once that happens, we can safely open a buy position on the next candle. In this case, we place the stop loss below the previous swing low or below the red midline of the PAC. For the take profit, a 1.5 risk to reward ratio works well. Let me show you another example. Again, price is well above all three key lines. Then we see a pullback into the PAC. We identify the most recent resistance level and wait for a candle to close above it. As we can see, the candle closes above, so we enter a buy position here. This trade plays out beautifully. Pro tip: if you're an experienced trader, you can scale out of your position as price approaches key psychological levels like round numbers, or you can trail your stop loss using the red midline to ride the trend longer. Now, for a sell trade example, price drops below the green and blue EMA, and also below the PAC, just like it is here. That gives us our trend confirmation. We then wait for a pullback to the PAC, like we can see we got over here. Then we identify the most recent support level and wait for a bearish candle to close below that level. Once it does, like it has done over here, we enter a sell trade on the next candle, with our stop loss just above the previous swing high or above the PAC. Another tip here: avoid taking trades if the pullback is too sharp or if the price doesn't respect the PAC boundaries. That could indicate the trend is weakening or about to reverse. Let's go over another buy trade setup. Here again, price is trending above the green and blue EMA and PAC. We get a nice pullback into the PAC, we identify the last resistance and wait. A few candles later, we get a breakout candle closing above that level, so we can enter the trade. Stop loss goes below the PAC or below the recent swing low, and take profit is placed 1.5 times the risk. When the price pulls back into the PAC zone, observe how the candles behave. Are they showing weak momentum like small-bodied candles, or are they printing strong rejection wicks? These are your clues. The more rejections you see within the PAC, the stronger the signal that the pullback may be ending. Also, watch the distance between the three lines. When the EMAs and PAC are tightly aligned and the price is consistently staying above or below them, that indicates a strong trend. However, if they start to flatten or get closer together, that might signal a slowdown or possible reversal, so you may want to avoid taking trades in such areas. Now let me show you a bad example. This is equally important. Here, the price rises above all three lines, but immediately pulls back into the PAC. We think it's a setup, but we don't get a candle closing above the resistance level. Instead, the price starts dropping and falls below all three lines. This tells us it was not a pullback, but a possible trend reversal. We don't enter a trade here, and that keeps us safe. Patience and confirmation are key. Another sell trade opportunity appears here. Price is trading below all three lines again. We get a pullback into the PAC, mark the last support level, and boom, a candle closes below it. Perfect. So we can open a sell position on the next candle. Stop loss above PAC, target at 1.5 pro-hit ratio. It plays out very nicely. You can also add confluence by checking for bearish engulfing or pin bar candles forming right at the resistance or support zones. These patterns give you extra confirmation before entering the trade. Another tip, avoid trading during news hours or low volume sessions. This strategy works best when the market has decent volatility, like during London and New York sessions. Let's look at one more buy trade setup. Price is clearly trending up and stays above all three lines for quite some time. We get a calm and clean pullback to the PAC. Then a candle pushes up and closes above the recent resistance. We enter a buy position here. The stop loss is tight, the risk is small. Remember, no trading strategy can give you a 100% win rate. That's just not realistic. Even the best setups can fail sometimes. That's why risk management is everything. Scalping is fast-paced and requires discipline, not aggression. Many scalpers overtrade, thinking more trades mean more profit, but in reality, it's about quality, not quantity. Taking just 2 or 3 high-probability trades per session is far better than taking 10 random ones. All right, that's it for this video. I hope you found this strategy and indicator as useful as I did. If you have any questions, drop them in the comments. I'll reply to every one of them. Don't forget to like the video, subscribe to the channel, and hit the bell icon so you get notified as soon as I drop a new video. Thanks for watching, and I'll see you in the next one.